I mean, I've said all along that the final chapter will be a credit event. It'll be induced by either tight or a seized up credit system, and everything runs on credit. So just the fact that they're crimping the pipeline of credit through standards tells you that we've got a problem.
Both gold and silver prices edged lower on Tuesday as the US dollar went higher as we approach this week's inflation data. Last week, Fitch downgraded the US long-term credit rating and markets tanked. According to Andy Schectman, CEO of Miles Franklin Precious Metals, this month stands out as the BRICS nations approach their meeting on August 22nd to discuss the creation of their new currency. At the same time that this happening, Andy believes that more banks will get bailed in causing more turmoil for the banking sector. Bill Holter, a former Wall Street manager, believes that it does not matter if a BRICS currency is created because countries are already moving away from the dollar, which will create hyperinflation. He also believes that once the derivatives of precious metals collapses, silver will quadruple in price, leading to massive gains for investors.
It's one thing for us to talk about the markets, the stock market, the bond market, real estate market, the dollar. It's another thing to say that the place that you've gone to bed every night thinking, geez, well, at least my money's safe in the bank, to say that that's not safe anymore, to say that that's systemic, to say that that has real big problems. And that happened with Janet Yellen doing what she wasn't supposed to do, bailing out the banks. And of course, it wasn't at the expense of the taxpayers, so we're told, right? But wait until they get bailed in, because during the Dodd-Frank, or as a result of the Dodd-Frank law or act, bail-ins are now written into law. Bailouts are not supposed to happen. And
Right.
When you see bail-ins happen this time, that's how fast things change. When people lose their money this time and are bailed in, anything over the $250,000 FDIC level, I think it becomes a whole different level of panic. But that what we saw in March and April was 6 months worth of business, really. So it's kind of skewed in a respect. But we're way ahead of last year, which was the biggest year by far that we've ever had in over 30 years.
And it'll only take one bank. Will only take one bail-in. Once there's one bail-in, you're going to see an absolute run, because people are going to wonder if their bank is next.
You have to wonder when you look at the massive outflow out of the commercial banks, the big money, probably going directly into the treasury market, like treasurydirect.gov, where they can sidestep all the bank systemic risk, borrow direct or invest directly with the treasury in short-term duration treasuries. I mean, they're losing on a dollar basis way more than the regional banks are, which, they're the ones with all of the immediate balance sheet risk. So we're told. You look at what's going on with Bank of America, their stock is getting clubbed too. So there's a lot going on with the banks, and I think that's where the problem will reemerge from. And so this before the storm, I think the banks before the end of this year and into next year, when over $1 trillion in these commercial real estate non-recourse loans have to reset or be refinanced, it's going to create a massive.
We're going to see a lot of dollars coming back onshore, because a lot of these nations that have stockpiled dollars to meet settlement for trade, they're simply going to dump the dollars. And that's a huge hot potato moment, which I guess to put in plain English, that's when the dollar hyperinflates.
Yeah, and there's a lot of talk about the difference between the BRICS currency not being a reserve currency yet. It would be a settlement currency. But if all of these countries are settling in their own currencies and ultimately in a common trading currency, the lack of trading or settling in the dollar in and of itself has to erode the reserve status of the dollar as rates come up and as the dollars hit our shore and inflation creates that event. 100%. And I couldn't agree more. 100% couldn't agree.
And my guess is that something will be some type of framework, and they may even give a timeline as to how quickly or slowly they plan to actually introduce a settlement currency. But it's already happening. I mean, look at Saudi Arabia. They're accepting other currencies than dollars. You've got China settling trade in yuan with no use of dollars whatsoever. So it doesn't matter whether August 22nd to the 24th is the date. It's already happening. There's nothing that's going to stop it, because there's no way, especially after the U.S. Confiscated the Russian Forex reserves, there's no way that trust is going to be rebuilt. And countries are going to say, no, we're not going that direction. We're going to stay with the dollar. The dollar is moving away from the system and to a point of extinction at some point. So, like I said, there's no turning back at this point. It's already in motion. The only question is the timing.
Yeah, even our allies like France buys massive liquid natural gas deal, I think, from Oman and pays for it in yuan. And I think it was Oman. I'm not positive, but it was one of the countries that's as big in exporting liquid natural gas and paid for it in yuan. All these trades used to settle in dollars. When you see Brazil, the second largest exporter of corn in the world, now accepting yuan for their trade. Little by little, all of these trades that used to be in dollars that are now settling in other currencies. And what is the yuan convertible into? Gold on the Shanghai Gold Exchange. And so, yeah, little by little, you're seeing, I think, the dollar being replaced. And so whether or not they make that announcement the 22nd, the big announcement to me will be the coalition of the Shanghai Cooperation Organization and the Eurasian Economic Union with the BRICS. They've all been formally invited to the BRICS. James Rickard says that is indeed what is going to happen, that they will coalesce. And, you know, you're talking the majority of human population when you put all these groups together. You throw the Belt Road Initiative into it, where all the OPEC countries are, and 150 plus countries, 50% of global GDP, almost 75% of the population of the planet. You put all of them together, and you're north of 85% of the world, of the world's people, that are going to be indoctrinated slowly and then steadily and then all at once into a new settlement system.
We talked about before, you can't print gold, you can't print silver, you can't print oil, wheat, etc. And once the financial derivatives lose sway, and again, whether it be because of supply and demand or for whatever reason, once the derivatives break, I mean, you could see many commodities that double, triple, quadruple in price literally overnight, simply because the financial cushion, if you will, of the derivatives suppressing the price is gone. And then it's discovered that the supply doesn't exist. So, I mean, it will all end up in a failure to deliver in many different commodities. But the question is, you know, the chicken or the egg question. Is it the failure to deliver that causes the financial problems, or is it the financial problems that cause the failure to deliver? It really doesn't matter.
I would think it's the financial problems that cause the failure to deliver. The realization, again, pointing to a bail-in. If we see a bank bail in, you're going to see mass hysteria where people who never would have thought about gold and silver are saying, holy shit, I need out of the system now, out. And that was what it was like when these banks were being bailed out. When they're bailed in and people understand the systemic nature of one bank pulling down several others, we haven't even talked about the insurance companies in that environment, but or the brokerages, but yeah. And so, yes, I think that will, on the physical demand side, from retail side or from the investment side, I think that's enough demand to sway the tables dramatically. We're already seeing massive increase in green and renewable energy type of demand for silver. And let's not forget, we've depleted all of our artillery, lots of it, sending it off to the Ukraine. And as I've said many times before, Google it, almost exactly 500 ounces in the tip of every Tomahawk cruise missile. So when you're talking about, you know, advanced weaponry and guidance systems, it all needs silver too. So between military and industrial and monetary demand, it's off the charts. Ultimately, when that happens, I think it really, you're going to see a squeeze on the COMEX and a squeeze on the LBMA, where everyone rushes to take what is available before it's not.